One of the most important benefits that federal employees can continue in retirement is the healthcare coverage under FEHB. But there are some common misconceptions about FEHB in retirement. In this video, we're going to debunk some of those common myths. That's coming up, so stay tuned. Welcome to the Money Briefing. My name is Jarrell Harvey and I'm with Fedway Financial. On this channel, we cover topics related to personal finance, federal benefits, and retirement planning. So if you find this video helpful, please consider sharing and subscribing. FEHB covers about 8 million people, and given the sheer size of the program and the cost of healthcare, FEHB is arguably the most important benefit that federal employees receive. Of the 8 million people covered by FEHB, a large number of those people are federal retirees and the family members of retirees. So it's important to know how FEHB works, not only while you're working, but also while you're retired. So I want to dispel some of the common myths about FEHB in retirement. But before I do so, let's start with the requirements to retain FEHB after you retire. In order to keep your federal health benefits once you retire, you must be either individually enrolled or covered as a family member in any FEHB plan for the 5 years of service immediately before retirement. During those 5 years, you can be covered under different insurance plans and providers, but the key is having some type of FEHB coverage. The 5-year period can also include coverage under TRICARE as long as you're covered under an FEHB plan at the time of your retirement. Additionally, to continue your health benefits, you have to separate from federal service under an immediate retirement or postponed retirement. If you leave under a postponed retirement, your health benefits will be temporarily suspended, but you will have the opportunity to resume your health benefits once your pension begins, assuming you met the 5-year rule that I previously described. Individuals that separate under a deferred retirement are not eligible to restart FEHB benefits. So we've covered the eligibility requirements. Now I want to jump into the 5 common myths or misconceptions about FEHB and retirement. And myth number 1 is that federal retirees pay higher premiums than federal employees. As a retiree, you will pay the same annual premium that you would pay as an active employee. There are a few agencies such as the SEC or Postal Service that contribute a higher percentage toward employee premiums, but outside of a few exceptions, the government contributes the same percentage to health insurance premiums for both retirees and employees. But there are a couple of reasons why the premium may be perceived as being higher. For one, retirees pay their premium on a monthly basis, whereas employees pay their premium on a bi-weekly basis. So their payments are spread across 26 pay periods versus 12. For example, self-only coverage for Blue Cross and Blue Shield Basic has a bi-weekly premium payment of about $87, but it will cost roughly $188 on a monthly basis. Another important factor that retirees are required to pay their healthcare premiums with after-tax dollars. Retirees are not allowed to participate in the premium conversion program, which lowers your taxable income by allowing you to pay your FEHB premiums with pre-tax dollars. Also, the monthly pension checks for many retirees will be smaller than their bi-weekly salary checks. So when all these factors are combined, the premium bite may feel a lot bigger in retirement. Myth number 2 is that federal retirees cannot participate in the annual FEHB open season. The open season period occurs at the same time each year, and it begins on the Monday of the second full work week in November, and it runs through the Monday of the second full work week in December. Open season is important because it provides federal retirees with a time to change plans, switch up insurance providers, and add or drop family members from their coverage. Healthcare needs can change quite a bit during retirement, so it's good to have the flexibility to make changes based on medical needs, out-of-pocket costs, as well as plan or doctor availability. Outside of open season, you can make changes to your plan due to qualifying life events. Some of the most common life events during retirement are marriage, divorce, death of a family member, and moving to a new area that is not served by your existing health plan. You have up to 60 days after a qualifying life event to make any necessary changes. A third common myth is that there's no need to enroll in Medicare Part B if you have FEHB coverage in retirement. This is often a highly debated subject, so let me start off by saying that FEHB provides awesome healthcare coverage as a standalone plan, and the decision whether to enroll in Medicare Part B is completely yours. Many times, the decision to forego Medicare Part B is solely based on paying the extra monthly premium. I like to encourage fellow retirees to look at the cost versus the potential cost savings of having both policies. Dual coverage of FEHB and Medicare can possibly reduce your monthly FEHB premiums, and it could minimize or even eliminate your other out-of-pocket healthcare expenses. Having both coverages may provide added protection against some policy limitations in retirement and the potential increase for medical services as you age. Use the open season to explore other plans, as you shouldn't assume that the best policy for you during your working years is the best policy for you in retirement. The fourth and final myth that I want to cover is you can cancel and restart your FEHB plan in retirement. This is one of those situations in which the wording and intent are very important. In most cases, you cannot cancel FEHB, then later restart it. However, you can suspend FEHB, then later restart it. Canceling FEHB and suspending FEHB are totally two different things. There is no requirement to keep FEHB in retirement, but canceling your policy can have potential consequences for you and your eligible family members. If you cancel your FEHB enrollment as a retiree, you will never be able to re-enroll in FEHB unless you're canceling your plan to be covered under your spouse's FEHB plan. On the other hand, you may be able to suspend your FEHB enrollment in order to enroll in certain plans such as Medicare Advantage or TRICARE. The critical point to remember is do not drop out of the FEHB program unless you're sure that you can re-enroll in the program at a later date. As I stated earlier, FEHB is one of the best federal benefits, and having a better understanding of some of these common myths will help you get the most value from this benefit in retirement. If you received any value from this video, please click the like button. You can also subscribe to our channel to get more content like this. If you have any comments or questions about federal benefits or retirement planning, you can add them down in the comment section below, or you can contact us by visiting our website at www.fedwayfinancial.com. Thank you for watching, and we'll see you on the next Money Briefing.